Getting closer to that historic high, Carl. It's mixed overseas. China's closed today, by the way, but if you look at the sectors today, it's the same narrative. It's the bull narrative that's winning. Cyclicals are up, semis, there's another leadership group. Retail's been good, industrials have been good, banks generally have been good. Flat today, consumer staples, REITs, utilities have been lagging this week. The non-farm payroll report, again, better than expected, goes a long way towards alleviating fears that U.S. job growth is slowing. That was a help for the bull narrative. Look at the S&P 500. We're up 15% year to date. We are 1.5% from the old historic highs. That's 2930. I want to keep an eye on that number here. The bull narrative, I've been saying it for the last 2 weeks. It's pretty simple. The bull narrative is principally that the China-European weakness we've been seeing is bottoming, that the trade deal will show little, if any, or low tariffs ultimately, that earnings growth will not be negative this year, that it will actually be in the low single digits, that we will get moderate inflation and there will be no 2020 recession. That is what's winning so far. There is a bear narrative, but it's been losing recently. The bear narrative is China, the European data has been mixed and uncertain, and it does not support the claim of a bottom, that the trade deal will keep the tariff threat alive, that the recession likelihood, in fact, is high for 2020, and that's the key issue. What side of the recession debate are you on? If you believe in a recession in 2020, then the market is definitely going to have trouble later in the year. But you can see for the moment that the bulls are winning. Look at the global markets. Shanghai's at a 52-week high. It's up 5% this week, and it was closed overnight. This European stock 600's up 2%. That's been doing better. Japan's up 3% this week. The S&P's up 2%. As I mentioned, we're at new highs for the year. You can see this in the sector leadership every day. Jim points this out. I point it out. Semiconductors have been market leaders again this week. The banks are up 4%. The industrials are up 2%. These are your cyclicals, and your defensive names and your utilities and consumer staples are to the downside. Finally, if you don't believe any of this, just watch bond yields. The market has moved decisively up since last week when bond yields started bottomed on Wednesday or Thursday and started moving up. There is your 10-year note, 10-year yield against the S&P 500 for the last week. It looks pretty good. It moves in lockstep. As the yields have been moving up, the stock market has been moving up as well. Finally, the global slowdown story is not completely dead. I hope you saw what Samsung said overnight here. They expect a 60% decline in first quarter profit because memory chip demand is fading. Of course, this is a proxy for global growth, memory chip demand. So this slowdown story has not gone away. It's just not the dominant narrative. We're off the highs, Carl, but still up for the day.